listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Miax, one of the fastest options platforms in the world. Miax is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we're back. Yes, it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from the brand spanking new TheOptionsInsider.com. Hope you guys have had a chance to check it out over there. All the good stuff we've added made it even easier for you guys to find your favorite shows and listen to them and share them and download them and all that good stuff. So all the articles and news and headlines, everything else you guys have come to expect from us over the years. Check it out, theoptionsinsider.com. You're going to like what you're going to find. Of course, however you listen, including live right now, 1 p.m. Central, 2 p.m. Eastern via Mixlr, or after the fact on your podcast provider of choice. Either way, send us your questions, comments, your insights, your pearls of wisdom. We do, yes, indeed, we do like to hear from you guys. And we've been off for a week or so we're raring to get back in the vol swing of things. And joining me to help me do just that, we got a full panel, including a twofer on the old Miax hot seat. They're both squeezing in there together. I'm not sure how they fit, but we'll find out. First off, we're joined by our old friend, Mr. Shelly Brown, the EVP over there at Miax Options. Shelly, welcome back to the program, sir.
Good afternoon, Mark. Thank you for having me back. Glad to be here.
Hope the seat isn't too much of a tight fit, because next year you're also joined by your good buddy there, Mr. John Smollen, also the Executive Vice President and Head of Exchange Traded Products and Strategic Relations. I said it before, it's the longest business card in the business, Mr. John Smollen. John, welcome back to the program to you as well.
Mark, thanks for having me.
And last but not least, that frenzied typing can mean only one thing. We are joined by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. by way of Carmen Line Capital. Mr. Meatball, welcome back to the program to you as well, sir.
I was actually using my brain to type. That was not my fingers.
Oh, that was your...
The brain power of my, it's like the end of Planet of the Apes 2. I just use my brain to control everything.
That's about as obscure a reference as you've made in quite a while. I know the first one, damn dirty apes, and that's the famous ending. I can't.
No, the second one, they as they're dying, the one guy launches a nuclear bomb and blows up the world.
Oh, well, there you go. Spoilers for what, a 40-year-old movie by now, something along those
probably
lines.
50
along those lines. Anything that stars Charlton Heston, probably a pretty old one. The first one, an iconic twist ending. The other ones, I never really got into the apes oeuvre. Perhaps that's on me. But what also is on me is some fun for the volatility space. So let's get to it with a little bit of the old volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
right, everybody, welcome to the Vol Reviews, the portion of the show where we, surprise, we review the week, and actually it's been a couple of weeks now, worth of volatility that's been lighting up our tape since the last time we all gathered here together on the old program. Coming into today, pretty much the latter half of this week has been pretty much all Powell love, the Powell put, call it what you will, Fed love. Markets liking what they're hearing out there from the Fed chair starting on Wednesday. They were pricing in, looking at the numbers midweek, the Fed watch there was pricing in about a 98% probability of a 25 basis point cut. And after Powell's testimony, it went from down to about 75% for that, but up to about 25% for a 50 basis point cut. So people getting even more aggressive on the cut. Either way, it looks like a cut is a certainty. Just the degree of the cut is what the markets are debating right now. Either way, the markets like it. They've been in rally-ho mode for pretty much 3 straight days. Coming into today, a tepid but still decent rally. We're seeing S&P up about 0.25%. The Dow hitting those new levels. Uncle Mike isn't here, so I'll do it for him. Never has there been a better time to sell, at least in the Dow, than there is today. Breaking through that 27,000 level out there. NASDAQ up about 0.5%, or actually about 0.4%, and the Dow up about 0.6%. So old school economy leading the charge out there. In fact, everything's up today. Gold, oil, it's just green across the board. And you know what that means, listeners. When it's green across the board, it's usually not green in our neck of the woods, which is the vol space. Taking a bit of a breather here today compared to our last show, which remember was 2 weeks ago. They're off quite a bit. We're seeing spikes is down to about a 1240, which puts it down right around 3.5, actually about 3.45 handles exactly from this time a couple of weeks ago. VIX cash at about a 12.5, which puts it down about 3.5 handles, so pretty much almost equidistant for both of them in terms of point moves down from this time at our last show. Also, our old friend VVIX, remember we say when it gets down into the 70s, it's time to watch it. Things might be moving, things might be shaking. And that's pretty much what happened. It dipped down into the 70s ever so briefly and then popped right back up into the 80s, which is where we find ourselves today, pretty much unched from where we were 2 weeks ago. It was around an 87 last show, and it's around an 87 today, about 86.5 or so. So if you just look VVIX to VVIX, nothing's happened. But a lot has actually happened in between those periods out there. Let's get to some of that. Let's go back the way we came. Let's start in Miax land. Guys, I know we got some prints. I want to get to those in a little bit when we talk some specific activity. But let's start off. Let's just look back at the last couple of weeks, what's been going on with you guys, what's been catching your eye out there in Miax/Spikes land. Maybe, John, we'll start with you. What's been lighting up your tape?
Certainly the volume has certainly kicked off since that big print a couple weeks back. More trading going on day by day. I know that the interest on the customer side and on the sales side has shown a lot of promise. And, as we work forward, we get closer and closer to, at some point listing the future where we've talked about. We like the trend and we like the volume and the quality of the markets we're getting, and it's heading in the right direction.
And Shelly, not to digress too much, but I'm looking at the numbers here, and it seems like even outside of spikes, things pretty robust over there in Miax land of late. Want to catch us up real quick on what's been lighting up your tape over there in Miax since the last time we spoke?
Oh, we're continuing to slowly grow the volume in Emerald. Happy with what's going on in Miax. We've had some fee changes in Pearl, which has drawn some volume. But the most interesting thing, of course, is spikes. The ADV is growing, 700 and some contracts last month, 800 and some contracts so far this month, of course, dominated by a few big trades. But more and more interest each day, and more of the brokers reaching out to us and inquiring about the product. And we've got additional functionality we're working on as well to be rolled out over the next several weeks.
Yeah, we're going to get to all that in a little bit. It's always fun to have some new trades to parse, and there's been some decent ones out there, some big ones out there in Spikes land. Before we get to that, Mr. Meatball, it's been a crazy topsy-turvy couple of weeks out there in the volatility space. What's been on your radar, on your tape since the last time we all gathered here together on the old program?
I was making a comment on this yesterday on YouTube that really all that happened was, do you remember what? I don't know if your little guy does this anymore, or your guys. Assuming John and Shelly's kids are probably not 3 and 9 anymore. I'm just going to go out on a limb. But do you remember when your little guy? I don't know if you guys remember this, but my kid is 9 years old, And I'll be darn it, the amount of times he asks me questions that he already knows the answer to, right? Like, maybe because he wants to be reassured, he wants to feel smart. Does that sound familiar to you guys?
He just likes to pester you, I think. I think it's unique to your situation, sir.
Yeah, or, Dad, are you doing your radio show? Meanwhile, he sees me doing my radio show. By that I mean the podcast here. And that's kind of what happened with the Federal Reserve this week. Is we already knew the answer, and yet we were still asking the same damn question. And so, what the market reaction is that sigh of relief, that reassurance, that the answer that we thought we already knew the answer to is in fact the correct answer that we already knew the answer to. And so with that, you're seeing just kind of a bludgeoning of the spike and VIX indexes, and we've now got a plus 3,000 S&P, and I think it's got a decent odds of settling there.
Yeah, it certainly does. The lift is in. It's been 3 sessions now, 3 straight sessions of pretty much nonstop upside. So if they were going to take a break, I think they would have done it by now. And at least so far, the bull is not exhausted. It was given more fuel to the fire today by some of the more data coming out of the Labor Department showing that inflation, which is, of course, the key bugbear to rates. If there's inflation, not going to get a rate cut. And yet inflation, I think the lowest it's been in, 2.5 years or something along those lines. At least the producer prices going into the core components of inflation, very low. So it doesn't seem like there's any inflation on the radar. So again, if anything was going to derail that potential rate cut, it might have been this data coming out today, and we didn't see that, which is why the markets are probably smiling yet again today. Speaking of smiling, you're probably smiling if you're looking at the VIX futures right now, at least if you're an old school VIX futures trader. We had the Typhon guys on a few weeks ago, and we were talking to them about, what the hell do you do when it's just this flat across the board? And they kind of said they're kind of just sitting on their hands. There isn't a lot. Well, I'm sure they're smiling today as well because we got return of an old friend. We haven't seen him a lot this year. Of course, I'm talking about Contango. Contango, the usual situation, the usual setup that we see out there in the VIX futures. And yet it's been maybe distressingly absent for most of 2019. We haven't seen a ton of Contango. We've been all sorts of other weird things, and we've been flat seemingly forever. But Contango has been an absent friend. It is back, at least for the time being, out here in the VIX futures. Coming to Showtime, VIX cash at about a 12.5. Obviously, we're seeing about a 0.8 or so point premium to that front future. July, it was at about a 13.30 or so. Then going out to Aug, we saw right about 3 points or so, a little bit less. It was about 15.40 or so for that Aug future. So a nice sharp front to the curve there. And then it still stays after you get out to September or so. It's still fairly flat. Maybe October. I'll say out to October. It's about a 16.40 to October, and then it's pretty much that throughout the rest of the year. So pretty flat out there, but nowhere near as flat as it used to be. Mr. Meatballs, this brought a smile to your face, as I'm sure it has many others out there, or were you happy with the flatness? Were you used to it by now?
Yeah,
Stockholm syndrome.
No, I've been putting on and looking at curve steepening trades for a while, and lo and behold, they're starting to work. Obviously you have a nice contango between July and Aug. July really getting toward the end of the cycle, but August has 35 days to expire. A 3-point spread is pretty darn wide, and shows you that there's probably still some a little bit of underlying recency bias to the overall market, and until we see I'll kind of think that we're in a fully normal time when I see about 30 days out kind of that 2-point spread, and behind that maybe a 1-point spread between the front month and the second month back. But more than 3 points higher than cash is a level that I expect out of September, October, not really August. August should maybe be, it's where we are. I'd expect August to be around 14.5.
Yeah, that one kind of left off the page to me as well. That one seemed, I wouldn't say aberrant, but certainly strange. Of course, we're in strange times. We were flat for so long. That was very strange. So I guess it makes sense that when the Contango comes back, it would come back, shall we say, aggressively. Are the crazes over there in your pitch chat, are they excited by this, or were they getting used to the nice... they can't complain about the erosion they've had so far out there. We'll get to that in a little bit in VXX and other products. It's not like they've been starved for the vol squeeze, but are they happy to have a little bit of the old Contango back?
Oh, yeah, and I'll tell you, the downside pressure on some of the ETPs is pretty stupendous. And some of the trades that set up between kind of, what we would call kind of convergence trades, similar to what you could do in a spike option, there are a lot of interesting convergence trades between spikes and kind of the spikes forward value and VIX and the VIX future, where there are some really kind of fun option trades that we could come up with. That, what I love about these products is they're the only product where you can set up a spread that if it's settled would make money that day. It's the only products where those exist, and that's because of the mean reversion assumptions associated with these products.
Let's get into I want to get into spikes, but I know you have to hop off in a few minutes really quickly. So let's do some quick VIX options now, and then you can hop off for a bit, and Shelly and John and I will dive deep into the maelstrom that is spikes volume of late. But let's kick it off today. VIX doing decent paper today, about 250,000 contracts on the tape coming into showtime. The ADV still pretty light, about 421,000 contracts. Top 10 positions, let's go from the bottom here. Number 10, the July 25s, 125,000. Number 9, the July 16s, $131 on the tape. Number 8, July 17s, 132,000. Again, fairly light numbers here, listeners. Number 7, the July 26s, 138,000. Number 6, the July 24s. You getting the pattern here? 141,000. Number 5, the first put on our list, the July 15 puts, 141,000. Number 4, the AUG 37 halves. That strike still persisting out there for 142,000. Number 3, the June 14 puts, 143,000, the second and only other put on our list. Number 2, the July 22s, $156, and round out the top 10 here. Number 1, 199,000 of the July 20s. Again, that shows you how things are still kind of light. 199,000 is usually maybe enough for the bottom part of the top 10, not for number 1. But today it is 7.8 million outstanding, about 5.8 million on the calls, about 2 million on the puts. Before I break down some of these trades for the week, Mr. Meatball, any interesting, exotic, enticing VIX options trades coming across your radar today, sir?
I'll tell you, everything I've seen has been call sellers. I did see, the guy was pretty smart. Guy bought the 13.5, 12.5 put spread. That was a win a couple days back in July, expiring on next Wednesday. But the bulk of the paper I've seen has been like SEP 22 calls for sale, September 25 calls for sale. A lot of September call selling. We saw one call buyer, and then I saw, this was kind of fun, I saw a September 14 put buyer tied to futures. The guy paid 9 cents. Might have been the 13, something like that. But we're definitely seeing kind of the more traditional paper that we would have seen in like a 2016 or a 2017 than we have seen the last kind of 18 months. So there seems to be some smart money starting to guess that, at a minimum 22 or 23 or 24 might be a safe level to go out and sell calls on.
Yeah, you're right. We saw some weird paper looking at this week here. It kicked off with kind of the old 1x2 in force, and that was kind of about it. On Monday, the big trade was the July 1821 1x2 going up 15,700 times by 31,400 times. I love these numbers. Going up for, looks like about that part at least, for about a penny debit. But then they also turned around, looks like, and sold 26,000 of the SEP 16 puts. Against, let me make sure those are, actually, no, that was a separate trade. So there was just the 1x2 going up and the puts were separate. So selling some puts to harvest the old risk premium, and that was opening, but then also doing the old 1x2. So not everyone betting on downside, but a lot of people betting on the old downside here. And then Wednesday we saw a lot of SEP put spreads, as you mentioned there. Mr. Meatball there, let's see, SEP 13, 18 put spread going up 12,000 times. Looks like a roll from SEP to OC, because then the OC spread went up 13, 18 as well, 12,000 times as well. 5,000 more. So the SEP 18, 13 put spread was the trade du jour on Wednesday. Went up, it looks like, close to 20,000 times, maybe more. And then on Thursday we had, again, you're talking a lot of calls on the bid, which is kind of the narrative. July 16s for 20 cents on the bid, 30,000 times. We got the AUG 24s. Right in the mid-market there, 21,000 times. We've got the July 20s going on. Maybe people bought those. And then AUG 19s for, 50 cents on those bad boys. 50 cents. Oh, that's that's a bit off the bid as well. A lot of weird paper here this week. And then today, the big prints are the AUG 20s going up for mid-market 25,000 times. Looks like a vertical, actually. The AUG, maybe rolling AUG out to OC 25,000 times. AUG 20, OC 22 doing that for looks like 34 cents. 25,000 times. Anything else on your radar, sir?
No, I'm actually in the VIX pit right now, and they do not seem that excited. So,
not much going on.
I don't think there's a lot going on.
Tell them they're live on Volatility Views as we speak. I'm sure they'll love that.
Yes, the VIX pit live on Volatility Views. There you go. Say hi, everybody.
Don't put a live phone in the pit. That's scary. Go forth. Talk to the pit. I want to talk to these guys over here anyway because it's been an interesting time. Like I said, Shelly and John, we've been off for a week. Or we've been off for a show. We've actually technically been off for 2 weeks. So a lot has gone on. It seems like, I don't know, maybe correct me if I'm wrong, guys, but it seems like Tuesday is the day for spikes. I don't know what it is, but people wake up, they got some spikes fever on Tuesday, because we saw Tuesday the 2nd, so right going into the holiday a couple of weeks ago, we saw some big prints going up. Looks like pretty much a three-way for about 1,000 on each leg, 999 to be precise. It was the AUG, listen, what is this? AUG 1824 vertical. Looks like it went up for 43 cents. Looks like paper sold this one versus the AUG 17 puts also for 220. It's like paper sold the puts and maybe sold. I'll let you guys, maybe you guys have more insight into what went up on this one, and sold the vertical. If that's the case, and they want spikes to hang out for a little bit. It's all done 1-to-1, no ratios here, listeners, which is usually what we see. And then this week, again on Tuesday, for whatever reason, more trades going up. It was 1,500, another vertical. It was the AUG 1826 vertical. Looks like it went up for about 88 cents, something along those lines. Looks like paper selling the AUG 18s and probably actually on the bid on the AUG 26s as well. So a little bit more of a lift to the AUG 18s perhaps. But again, those were a little hard to see where they went up on those. Again, the OI changing quite a bit since our last show, listeners. Remember last time it was all that 1x2, 5,000 by 10,000 times. Those have changed a little bit now. The number one position out there in Spike Land these days, the AUG 26s, 8,500 of those. So they took some of those off the board, hence those 1,500 of the AUG 26s we just talked about earlier. Obviously closing some of that, as well as 4,600 of the AUG 18s open. It was the 1826 vertical. So they took about 1,500 of that off on that one. Also saw the AUG 24s, number 3, for 1,000 of those. That's what we're just talking about, as well as the AUG 17 and 8 puts for 1,000 of those bad boys as well. So a lot going on. Total 15,000 OI. A lot going on. Maybe let's start with this, guys, Shelly and or John, whoever wants to take it. What's going on with Tuesday? Why is Tuesday the big day in Spikes Lane?
I can only think that's coincidental. To be honest, before you just pointed this out, I didn't realize these trades were all on Tuesday. Although we did have, we've had some other trades go up aside from Tuesday. Don't know what the customer's thinking. I don't know if it's the same guy or not, but we'll take the orders any day of the week.
Yeah, I'm sure you're not picky. I'm going to set my alerts now for Tuesday to do a special spike scan every Tuesday, because that's when they come to play. But what is behind these prints we're seeing? Obviously, you saw that big 1x2 a few weeks ago, and now following up on the heels, we're seeing some rolling and taking off and adjusting. So clearly, decent sized paper, 3,000 lots in a three-way. And what is going on out there? What are you hearing anecdotally that is driving this new flow?
Well, people are certainly cognizant of the significant fee discount in spikes relative to the competitor. I believe there's a few brokers out there that, as they're talking to their customers, are recommending looking at spikes instead of VIX. I'm sure they're out shopping the other side, and I suppose when they can find the other side at an equal price and given the lower execution costs, they're going to come here.
Is that all it is? Is just the fee comparison? Or I know before you did that kind of test run with some of those market makers to tighten things up a little bit, and that really drove some flow. Have you been doing any other test pilots, or is it just really just the fee side, you think?
Well, I mean, that pilot, it really is. The fees are part of that. We added an incentive for market makers to post a maker rebate. Our markets have definitely tightened up. And I think the users have seen that, and they're more willing to put their positions on the product because the markets are getting tighter.
John, was I looking at that correctly with that three-way before, or did you watch that one go up? Was it? I would have to guess they're probably buying the I-18s, selling the 24s, and then selling the puts to finance the whole thing. But the prints were a little weird on that. Is that what you saw as well, John?
I'm with you. Yeah, I believe you're looking at it right, Mark. But I'm not quite sure. We get, as Shelly said, we get information from the market, from brokers, and some of the market makers, but. Obviously, I think the points that Shelly made are why are we getting this volume? I think it's a combination of a lot of small things coming together and confidence from our market makers and people are comfortable putting the position on, seeing it work, seeing it expand and contract and do what it's supposed to do. So, I think you're spot on as to what went on in the market.
Interesting that we're seeing these prints go up, too, right around the July 4th holiday. The holiday weekends leading in and coming out of them, not usually big bang-up times, particularly in the summertime, for vol trades, yet we're seeing pretty sizable prints going up in Spikes land. So holiday Tuesdays, that's the hot time for you. I'll have to make sure I'll definitely have to put an alert on for those and keep an eye on it, listeners. We'll call it Spikes Tuesday. And we'll see what's going up there. Check in every week. Stay tuned, guys. We got some listener questions that pretty much pertain exactly to what we were just talking about. So put your question answering hats on. We'll get into those in a little bit. Let's break down a little bit too here of what's been going on out there. And one of the other products you guys like to trade, and by like to trade, I mean mostly you like to watch it erode. And that's pretty much what it's been doing over the past couple of weeks. That's our old friend VXX. Forget VXXB. No one calls it that anymore. We changed the name. They went along with us. It's all official. You can check it out. Look in the news. But VXX at about a 23 coming into showtime. That's off 3 handles from where we were 2 weeks ago. So again, everyone who's been out there looking for a little bit of the old erosion, and I know that's a lot of you, you can't really complain with what you've gotten over the past couple of weeks. We've seen it come off quite a bit, and certainly that's making a lot of you out there happy campers. Of course, we'll check for the OI. That lately, the OI has been a little more biased to the upside than you might imagine, so maybe that's not the case. But I know from our audience, what you guys send to us, the lion's share of you guys are leaning to the dark side, and you're probably pretty happy right now. Whether that's the case going forward, we'll see. We'll see how much more we can squeeze out of this sponge before it's kind of dry for the near term. But right now, looking pretty good out there. Volume-wise, looking pretty decent as well. Today, about 136,000 contracts on the tape coming into showtime. ADV about 182,000. Let's look at the top positions out here to see what's been going on out here, what people have on. Let's see, number 10 out here in VXX land are the July 27. So again, to the call side, kicking things off, 17, almost 18,000 of those. Number 9, the AUG 22 puts, 18,700 of those. Number 8, the July 21 puts. So getting some nice little put strip here, about 19,000 of those. Number 7, the July 22 puts, 20,000. Number 6, the SEP 19 puts for 22,000 of those. So a nice little put strip there. Then back to the calls, the July 32s, 27, almost 28,000 of those. So number 5. Number 4, the Jan. That's Jan. 14 puts, about 30,000 of those. Number 3, the July 42s, 32,000 of those. Number 2, the back to July. Hard to read my notes here. The July 23 puts, 36,000 of those. And the number 1 position out here in VXX coming into showtime here were the July 35 calls, 38,000 of those. So there are a lot more puts on the list. Recently, the top 10 was almost all dominated by calls. Let's see, we got 4, 5, 6 puts. So 60% of the top 10 on the put side. Still, maybe not as put biased as you might think. That's close to 50-50. And the call still leading the dance out here in July. We'll see what happens when July goes off the board. If that remains the case, if folks are still as excited and optimistic about VXX, but it still puts rearing their ugly heads up here all the way out to September on the 19th. So we're getting south of the 20 handle now, which is kind of interesting. Again, showing just how much erosion has kicked in for a long time. Everyone was fixated on that 30 handle in VXX. They wanted to say when we're going to break through it. They were lining up those 30 puts. Now 30 handle, a distant memory, at least until the next trade war blip happens and we all go rallying back up out there. Speaking of rallying, let's see what's paper has on the big trades of the week. Actually, the big print today looks like a one-handle roll. I'm not sure why you'd bother rolling in the same month for a handle, or why you'd bother putting on a one-handle wide spread if this was all opening, and it is not all opening, so it looks like it might be a roll. It was the July 23-22 put spread going up for, looks like 42 cents here. Looks like paper, maybe, it's so tight here, it's hard to tell, but probably maybe selling this thing, doing it 7,000 times. So if that's the case, maybe drawing a line this hand. I have to wager they're probably buying it. But if they are selling it, maybe they're taking it off for their 42 cents or so. Either way, why you putting on or why you rolling a one hand. We talked about this before many times on the show. Sometimes they do the 1x2s in VIX too wide, and sometimes in VXX they get a little too aggressive with the tight ranges. At one point for 42 cents, what are you really accomplishing there other than giving your broker a nice little lift? Speaking of a little lift, the vol had a bit of a lift, then it's come off quite a bit. I know our friends over there at T3, Simon, he was on the show not too long ago, and he was very excited to talk about their newest addition to the vol family. Of course, they have Spikes. He is the Spikes father over there. But they use that methodology to do a little Bitcoin vol, a.k.a. the Bit vol. And how things have been moving on the crypto front. Hopefully you guys have been enjoying our crypto rundown program because there's been a lot going on over there to talk about. Coming into today, we're seeing things stabilizing a little bit, as in Bitcoin's only off a mere 0.25% as opposed to the, it looks like that's off about 27 handles as opposed to the 400 to 500 to 1,000 or more. In fact, it moved a couple of thousand just in 24 hours earlier this week. So it's been swinging along quite a bit. I think today's somewhat quiet move has actually had the vol come in because the vol has been exploding out there. The realized vol out there in Bitcoin just on Monday, on a Monday show, was at about a 125. That's 1 month realized. The Bit vol, remember on our last show, that's of course T3 and Simon's new baby, their proprietary Bitcoin volatility index, was at its high pretty much the last time we were on the show, which was June 28th. It hit its high of 135.78. That's the high pretty much forever of the Bit vol in its short life. And right now we're at about a 112, so off about 23 points. So that vol has come in markedly, still very elevated. If you look at that 112, that puts us still in the upper echelon. There's maybe a few days in May and June that kind of threaten that level, but nothing really outpacing it. So we're still very elevated, but we're off the extreme highs that we saw this time last show. So if you're looking for volatility, crypto still has it in spades. But you don't have to look that far out if you don't want to get into all the esoteric products, because guess what? You guys love earnings. We know it. You guys hit us up about it pretty much week in, week out, talking about earnings. Well, the earnings season is winding down. There's still a few names popping off this week. We had Bed Bath & Beyond this week. We had Delta yesterday before the bell. We had Levi's and PepsiCo earlier this week, as well as our old friend Helen of Troy. Had a fun talk about them on the option block. Who knew that they were a 50-year-old company? Who ever had even heard of them? Well, now we have. And but that's not where the action is. Next week, listeners, is when things are really heating up out here. We're at the big names popping off again, starting with, what do we have, Netflix. Well, we start off with Citi on Monday, and then we've got a lot of financial names, Wells Fargo, Goldman, and Domino's Pizza on Tuesday. And then Netflix, the big widowmaker on Wednesday, Bank of America. And then Thursday we get into it. We've got Honeywell, Ally, a bunch of others. And then later on next week, of course, you have Intel, Alphabet, all those good names. So we're kicking it off again. Earnings season popping off, listeners. Hot off the presses. This hasn't even gone live on the website yet. You guys know you can go to theoptionsinsider.com. Check out our earnings move and earnings move results reports. They're all completely free. It's pretty much the best data in town when it comes to earnings volatility analysis, and it's all free. So if you're not taking advantage of it, at least as an indicator, you're foolish. TheOptionsInsider.com is the place to go. Click on the Options, News, and Articles tab on the top there, and that'll get you out to all that good stuff. Just look for the earnings move reports and dive in till your heart's content. Well, we got a new one. It hasn't even been posted on the site yet, so a little bit of breaking news for you here on the show. And it breaks down all the big upcoming announcements they have coming up next week. We've got Citi. Let's see, coming into the report time, they were at about 71.60 on the stock. They're pricing in about 3.5%. That's about 2 points richer than what they've priced in the past. Goldman, they're at about a 2.11 coming into report time. They're at pricing about a 4.5%. That's about nearly 2 points higher than they have priced in the past. So it looks like these straddles are pretty rich compared to recent. JP Morgan, 2.6%. They're pricing in on a $114 straddle or $114 stock. That's about almost double what they priced in on previous earnings announcements as well. So seems pretty rich. eBay, they're pricing in about the same. They're at about $39, almost $40 in the stock, pricing in about 6.4%, and they were at 6.3% on recent past expectations. So that's kind of in line. A good old Beamer, 141.25 coming into the report. 6.2% is what they're pricing in right now, and they've averaged about 4.8% in their past moves. Netflix, let's see, that's the one a lot of you like to watch. 380 roughly coming into Showtime or report time, pricing in nearly 9% on their straddle, which is actually kind of light for them. And yet, in previous moves, they've actually moved about 7.4%. So a little bit richer compared to even previous reports. A lot of names out here you guys can sink your teeth into for yourself. Wells Fargo, let's see, they're about the same. They're pricing about 1.8% is what they priced in the past. Let's see, some airlines, Delta, they're pricing nearly 5% on a $59 stock, and they're priced in 2% in the past. So a lot of great stuff. eBay we went through already. So a lot of those. That one not even live yet. Get on over to the website. It'll be live shortly, right after the show's done pretty much. You should be able to go and read it. If not, you can check out the ones from the 10th and everything. Those names are in there as well, just earlier versions of that analysis. So if you want the most up-to-date analysis, head on over to the website as soon as you hear this and click on the links, and you should be able to find all those great free reports up there for you guys to sink your teeth. Oh, they even have Microsoft here. Let's look at Microsoft really quickly. They're coming out on the 19th. Or the 18th, excuse me. They're coming at their report time. They're about 138.5 on the stock. They're pricing in about 4%, and the previous move they've averaged about 3%, 2.9%, so about a point rich. Remember, a few cycles ago, Microsoft blew the doors off at about 4x their straddle, so they can do that. It's a very rare occurrence. Microsoft usually kind of a bit of a dullard in the earnings scene, but they are prone every now and then now to some outperformance. So we'll see if we see some of that. Speaking of outperformance, let's see if your questions can outperform previous shows. A little bit of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to your voicemail section, the portion of the show where you guys take the reins, your questions, your comments, your insights, your pearls of wisdom. Let's kick things off. I'd like to ask you guys some questions, too, and let's kick it off here. Actually, on our last show, we asked you guys, markets were hitting fresh all-time highs and vol was eroding. Sound familiar? Same scenario we're in today. We asked you guys what your go-to index option strategies were then, and we gave you 4 choices: protective puts or put spreads, covered calls, short puts or put spreads, and collars or bearish risk reversals. It was pretty much a 3-way tie with a slight lead, 33% coming to short puts. So people still harvest in premium. And even in these markets with a tie for second there, 30% each to protective put spreads and covered calls. Only 7% for collars, so our bearish risk reversal. So no love to protection out there, at least from the collar perspective. This week we're asking you guys, getting back in the vol side. Again, new highs in the markets, vol coming off. So if you're not getting your vol in the indexes, where are you looking? Or maybe you are. Let's see. We gave you 4 choices. It could be the energy complex, so it could be WTIs or USO. It could be out in the metals. It could be your GLDs, your SLVs, your COMEX gold, something like that. Could be crypto. We just talked about how much vol is going on in the crypto space, Bitcoin, ETH. We don't judge. Or are you staying with what brought you to the dance? You're staying with the index vol. Could be your Spikes, your VIXs, your VXX, whatever is your poison of choice out there in that space. Mr. Meatball, glad you can join us back again from the depths of the VIX pit over there. And what do you think our audience is choosing, sir, right now for their vol fix of choice?
I'm going to say crypto, just because of being on my Uber. So this morning my train had an accident, the train in front of me, and I had to take a lift in to the city. And the guy starts explaining to me how crypto's gonna, how crypto's way safer than S&P 500 futures. And needless to say, I just zipped my lip and let him drive.
Well, the guy, no one can lose their laptop and lose their password to your S&P futures account, right? And then you're locked out forever.
That is true. And $32 million worth of S&P futures is just going to go disappearing, for no reason. So I'm going to say Bitcoin. Although I would add that I think if you look at the vol indexes,
Gold has really been the most robust of all the products you brought up there. It's the GBZ, which is the VIX of gold, or are they going to have? You think they're going to have a GEIX index where it'll be like the gold spikes at some point, or the Glikes? What do you call it? The Glikes? What do you think? Glikes?
I don't know, John, Shelly, you guys have any commodity vol indices on the docket?
We don't at this time. We are looking at some other potential products, but nothing in the commodity space in the short term.
Well, I've already trademarked Glikes, so make sure
call your lawyer.
If you decide to call it Glikes, you have your checkbook ready.
The free branding advice that comes on this show is legendary.
By the way, Mark, I think they went with Viking for the spike volatility index.
Well, I suppose we'll have to find out forthwith when it's actually out and disseminated. So your vote is for metals or crypto? I forgot.
The public vote is crypto. I think the most interesting thing last couple of weeks has been metals, notably the mini metals.
Yes, so mini metals are the best thing of the metals completely, and that's an old callback, listeners, to the old days of the option block. John, Shelly, you guys have any thoughts on what our audience is voting for here? Remember, 4 categories. Could be the energy complex, could be the metals complex. There has been vol in both of those. Crypto, vol has been off the charts, or are they staying with what brought them to the dance? The meat and potatoes of this show, the equity vol. What do you guys think?
Shelly, you first. What do you got?
Yeah, I don't have a strong opinion. I've been focusing on the existing product, so I'm probably the wrong person to ask that question of. Sorry. I'm
gonna put you down in the index vol category. I'm gonna put both of you down, I think, in the index vol category, because that's where your bread is buttered. I get it. You gotta stay with what brought you to the dance. And looks like our audience is actually feeling some metals love, Mr. Meatball. You were correct. At least not with your audience pick, but with your personal pick. Metals 45%. Who would have thought that? Gold vol has been in the toilet for a year, more than that, and yet now people are looking gold vol all of a sudden. Getting a little bit of spark of life, and people are liking it to the tune of 45%. Then it's a tie for second with 15% each for crypto and energy. Actually, I'll take that back. Index is number 2 with 25%, and then 15% each for crypto and energy. Again, this one's got about a day or so left. I know Twitter was down for a bit yesterday, so you couldn't vote. It's back up now. So get on over there to the Twitter machine, make your voices heard at options over there to chime in. Here's an interesting one from George. I'm glad we got 2 guys on from Miax, because you guys can answer this one better than me. He wants to know, what did the Spikes folks do? The Spikes folks, I like that. Not the Miax folks, the Spikes folks. What did the Spikes folks do to get that sizable 1x2 printed, recently? Do you expect any more prints of that magnitude on the horizon? I've been evaluating the product and traded my first 10 lot. Oh, there we go. We got a customer here. Would like to see more big players get involved. Great program. Anything on commodity volatility? Well, I'll answer that last part first. I'll give John and Shelly time to think of their answers. But yeah, we used to do a lot of commodity vol. We that's before we had a separate show devoted to all of that list. So, George, now if you want commodity volatility, our TWIFO program, This Week in Futures Options, is the place to go. We used to touch on, GVZ, OIV, all that good stuff on this program as well. Now we have a kind of a separate program for that. So check out TWIFO if you want more on that. In terms of that, John and Shelly, we kind of talked about this earlier. First off, he's trading spikes, so I guess you like him. He's your new buddy. And then B, he wants to know, I think you talked about it, maybe reiterate some of that before, that kind of pilot program you guys did, and now the rebates or the fees, why you think this new volume is accruing over there at Spikes.
The rebates are designed to encourage market makers to tighten up their markets, which they're doing. The customers that are using Spikes, and I don't know who the end users actually are, but the brokers that route their business are interested in the product again because of the fees. They're encouraging their customers to take a look because of the fee savings. I expect that the firm that did that first 1x2 again is somebody who's very fee sensitive. I expect there are other firms out there that are fee sensitive as well that are looking. I would expect additional customers to come in and use the product. And to the user that sent the question, we really appreciate the support. We're trying to build the product, and we expect more institutional users as well as customer business going forward. And again, thank you for the support.
You need like a little segment. You trade a 10 lot on spikes, we'll send you a hat or something. How about that? A Miax spikes hat for your first 10 lot.
That's payment for order flow.
That's
we can't
true.
do that
That's
direct
true.
to the customer.
Well, if we do it here through the Options Insider, then it's just different. Then it's just saluting our loyal audience. But either way, we love to see people out there trading this stuff because then it gives us stuff to talk about, which is what we're here to do at the end of the day. So yeah, get those 10 lots out there going. Do you expect any more prints? Yeah, we just talked about them on the show here, George. So hopefully you listened at the beginning of the show. We talked about a lot of prints, 3-way 1,000 lots and some other rolls, 1,500 lots there. So some decent size coming in addition to your 10 lot over there, George. Let's see here. 4509. 4509 wants to, interesting name. 4509 wants to know, I hear you. He hears us. I hear you about the weird discount that we're seeing in the DEES VIX futures right now. If we see some developments on the international front and vol eventually comes in, do you think they'll still keep DEES relatively similar to where it is now? I guess what I'm asking is if DEES just looks cheap now because the rest of the curve is somewhat elevated. Once that premium is taken out, will DEES look somewhat expensive by comparison? Great question. We were touching on this on the show a couple of times. Pull up that futures curve again so we can get it exactly where it is right now. But in general, it's been something of interest that, the curve's been, till this week, was markedly flat. And the premium to roll out to DEES was non-existent. You got a credit to do it because it was cheaper. So it was kind of weird. And we did kind of comment on that maybe some of that was just because the rest of the curve was a little bit inflated. Now that we've seen some of the vol come in on the front of the curve, we're still seeing DEES at about a 1640, which is right around where Nova is, 1650 or so. And then it picks up a little bit again into JAM, 1693. So DEES is still not, I wouldn't call it, it's, I guess compared to the rest of the curve, you're right, it is comparatively cheap, but maybe not a bargain net overall. I don't know, Mark, I like this scenario he paints here, that if all the vol premium goes away, the trade war goes away, all these international entanglements resolve themselves, and suddenly we're left with a relatively vol-free environment. How do you think DEES lines up compared to the rest of the curve? Is it all going to get smashed? You think DEES will stay maybe where it is? What do you think?
Well, I mean, traditionally DEES trades at a discount because of seasonality. I still don't understand why. We've seen some crazy December expirations, but it does. And that's because, that the week following December expiration, we have the Christmas holiday and we have New Year's. So those tend to be two of the slowest weeks of the year. Although we saw last year, there was plenty of craziness. And so you will likely see DEES trade at a continue to trade at a discount relative to Nov and relative to November and January, but it'll probably look a lot flatter. One of the reasons why DEES looks like it's so cheap is just as a percentage of the actual prices. If it maintains that percentage discount and the curve drops as a whole, it won't look nearly as deflated as it currently looks. But I think you've got some real seasonality in here. Maybe we need to bring on the Thompson twins to kind of talk that seasonality aspect and to kind of further enlighten the client that's asked about this. But yeah, December notoriously trades at a discount to November and January. And I don't see that changing, even if the curve normalizes.
Yeah, I mean, just given what they've been doing for forever out there now, they like to give a little bit of a comparative discount for DEES, and you're right. I don't see why they would undo that. They would keep DEES where it is and crush everything else. That would be interesting. That would be very steep Contango then, but I don't see them doing that. I think if it all comes off, DEES will come off as well, and probably a little bit more because they like to have that. Despite what we've seen the last couple of years, they like to have that little bit of technical term I think is cheapness out there in the DEES future. Speaking, let's keep on rolling now. It's time to go into the most challenging segment of all. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball. This is indeed the portion of the program where we attempt to wrestle with the VIX gods and the volatility gods, try to figure out what the heck is going to happen this time next week, listeners. So this, not the end of the day, but the end of the show this time next week. That's what makes it a challenge, because we did our last show. We weren't sure if we were going to have a show on the 5th or not. Turns out we didn't. So our prognostication was for a day that we didn't have a show on. So we were guessing last time, I think it was me and the meatball, and actually the rock lobster. And I was at a 14.75. The rock lobster was at 13.95. I'm looking here. That would have been the 5th of July, which was, of course, an interesting session. But we saw a low that day on the VIX cash of about a high of 13 and a quarter, 13.28, low about 12 and a half. So it looks like his 13.95, I guess, was the closest. But none of us were really super in the ballpark. Particularly, and I can't pull up on this chart exactly where it was at this time, 2 p.m. Central, listeners. I'm looking at opening and closing data, unfortunately. So I don't know exactly who was precise, but my 14.75 clearly was a wee bit too rich. So I will be a generous fellow this week, Mr. Meatball. I will allow you to have the dubious honor of going first, because your cohort there came the closest last time. What are you feeling for this time next week in the old VIX and Spikes, sir?
Oh, all right. Well, let's think. Where are we? What did Andrew guess last week?
Let's see. Last time he was at a 13.95.
Oh, geez. He didn't even come close. I can't claim a win, but I'll take the firsties. All right. So this time next Friday, we'll have been in earnings season for a little bit. We'll have, we're through a lot of the junk. I'm going to say that you're going to see the spikes at 12.20 and the VIX at 12.25.
Interesting. I was looking at that just now, and yeah, you're at about a 12.5 for both of them right now, listeners. VIX and spikes coming into the end of the showtime here. So Mark's pulling in a little bit. You said 12. You said 12.20 and 12.25. Is that what you said?
Yeah. Right now spikes has actually been trading a little bit discounted to VIX the last couple of days. So I'm gonna go with that trend. That's
been strange. I have noticed that as well. That you used to have a premium. I'm gonna go the premium route for both of them. I'm feeling a little bit more vol than you, but not a ton. At about 12. So Mark's giving it about a quarter of a point discount next year. I'm giving it a little bit of a quarter point premium. I like it around 12.75. I'll say 12.75 for VIX and 12.80. I'll go the premium route just for old time's sake for spikes. So a nice, pretty tight market, about a half handle wide. I just don't think they could squeeze more out, and I would certainly not be surprised by that. But I think there could be enough popping in. Maybe we have earnings. Earnings can tend to sometimes deflate the vol, but it can also, in the near term, inflate it a little bit too. If something crazy, you have Netflix coming out right not that long before the show and things. So things could happen there. But in general, you're right. Earnings tends to usually be a vol dampening thing. But I'm going to go out and say a little bit of juice, not a ton. Just a little bit of juice coming in up to 12.75, listener. All right, unfortunately, that music means we've come to the end of another epic journey through the world of volatility. Oh, what a journey it has been. Listeners, talking spikes, big prints in Spikes land of late, talking VIX. Some weird prints out there as usual. VIX futures. Contango is back, our old friend, back again. We'll see how long he lasts. Maybe not too long if recent past at least, is prologue. Talked a bunch of your questions, earnings vol, crypto vol, a whole bunch of fun vol talk on the show today. But before we go, let's go back around the horn and see what our friends have that may interest you. Let's start in Spikes land. John and Shelly, you guys cranking away on the Miax option side. Pearl getting a lot of volume out there. Spikes, we've got the future on the horizon. We've got the Viking. What can people look forward to from Spikes in the coming weeks, sirs?
Hoping additional interest from the institutional clients, and as our market makers continue to tighten, more customer interest.
There you go. More 10 lots, listeners. Hit us up. Let us know if you're trading, and if you are, what you're using it for. Are you doing the old same strategies as you do in a VIX? Is it something different? Let us know. I'm curious to see what you guys are using it for, as you clearly are starting to trade it more out here. And Mr. Meatball, sir, I know you guys had a recent, 4th of July, Black Friday in July kind of sale on the webinar archive. Is that still going? And what else is cooking in the land of the pit?
Come check out our YouTube channel, Option Pit. I've been doing kind of a morning thoughts every day at 9:15 Central. I just kind of waft about what I think is going on and how it relates to markets and a couple interesting trade ideas. So come to check out our YouTube channel, Option Pit.
There you go. Check them out. Option Pit on the old YouTubes. People ask all the time if the podcasts go out on YouTube. We have that functionality. We turn it on every now and then. We need to really overhaul it a bit to make sure, because they are audio files, obviously, listening, but we have the functionality to put some of those cool static images up there for you. So if you like consuming your audio, I know a lot of your audience does, Mark. When I was at your event, a lot of them were asking me why our stuff wasn't on YouTube. So we're looking into adding more of that, so stay tuned for that. And stay tuned to a lot of good stuff. And, of course, we'll be back on Monday for more shows throughout the week. We got the option blocks. We got all of our other fun stuff, TWIFO, everything else going off next week. And then, of course, we'll be back next Friday. Same bat time, same bat channel for a little bit more Volatility Views.